Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Teaching Tech Tuesday. Let's take a look at a trade a friend of mine took, not a trader. We'll call him John. We're going to use John as a case study to talk about the pros and cons of what he did, because I often get people like John asking me, I have a small account. What can I do with a small account? I want to trade. I want to become a trader. I see good things about these trading people. So some people want the Lambos. Some people are just interested because as a society, we are becoming increasingly financialized, and it's kind of in your face in various ways all the time these days. So this was John's trade on TQQQ. QQQ is the NASDAQ 100. TQQQ is a 3x leveraged QQQ. So on June 9th, these are real texts, by the way. He says he bought a few shares. He wants to see what the ride is like. And I, of course, said it's over because typically when we see retail participants entering a market, it's usually the top or towards the top. And as many of us know, in crypto land, when we get texts from family members or friends, typically that's also towards the end. So John, in this case, I'll say he got lucky, but he certainly had momentum on his side. I'll get to that. The entry was actually pretty good because it was at all-time highs. It was at fresh all-time highs. And we'd been talking about a cup and handle chart pattern. Not that John had any idea what that was, but the entry was actually pretty good. So I'll give him an A+ on the execution there, even though just the sentiment gauge for me was this is typically the end of a run when we get these type of people into these types of products. So I sort of prompted him today, and he mentioned it was down 20%. This was today's text in the bottom right. But this is the typical initial evolution or journey of many traders. I pumped money into Bitcoin in 2013, and it went from 1,000 to 200 per coin, right? That's just the way it goes. And you lose most people right there, or you lose people continuously because they don't understand what they're doing over and over again. And it's more or less gambling than trading. So let's learn from these people, learn from the mistakes, and try to figure out a slightly better way to do things, which is why I talk about what I do on this channel at all. Just looking at the cloud, again, his entry on TQQQ on the daily was actually pretty good. It could have been better based on the cloud, but based on the chart pattern, it was good. Based on the duration of this move, as I'll mention, it was certainly late. It was already up 300% from the January 2023 low. As a swing trade, caught it slightly late based on the cloud. And then as far as entry, exit, stop loss, the plan side of things, he could have used chart patterns. He could have looked at previous all-time high resistance. It just so happened to break down there, but that's always something you want to watch. Where are the obvious horizontal levels? That's really one of the easiest ways to identify where might this trade get into trouble? Where might this trade start to roll over? And where should I look for predetermined partial closes or predetermined scaling out levels on the entry? One way to do that easily is just to say, okay, what was the most obvious place on the chart? You can look at RSI, you can look at overbought, oversold. Sure, right? We can talk about that stuff. That's a little bit more complex, but just to simplify it, horizontal levels are huge. Anybody can draw a line on the chart. If he was using the chart pattern, call it a cup and handle, call it an inverted head and shoulders, call it whatever you want. It was certainly there. And all the hallmarks for that. You take the depth of the pattern, you measure it higher with fibs, and we hit the level between 81 and 91 pretty well, where again, there is a point on the chart where it's saying, hey, we should probably think about closing. We should have preset orders there. We should partially close something up there at the very least, just because most people trading like this, it's not really an obsession. It's not something they look at every day. It's a hobby or a thrill. It's not exactly, they're busy, right? They're not doing this every day. You could have also seen inverted Adam and Eve here. You could have used a trailing stop loss. There are different ways you could have tackled this versus just sort of letting it roll over completely back to the entry and round tripping everything. And honestly, this isn't the typical first trade for most people. Most people close too early. Most people don't really round trip a trade. They either add to losers on the way down, or they trade on the other side of the trend, or they just get completely chopped up. So this is an example trade for a non-trader. It's actually a pretty good trade. So the pros and cons of this round trip TQQQ trade, and I mentioned TQQQ, which is just a great example for crypto, super volatile. It's volatility on top of volatility because it's the QQQ. And this is analogous to a lot of crypto moves that we see. So the pros, he was trading with momentum. He's not trading the inverse. Again, I see a lot of people come in here. They say, oh man, this can't keep going. It's at all-time highs. Tech is overvalued. AI is overvalued. All these people on TV are telling me the market's too narrow. He probably didn't know about any of that stuff, to be honest. Maybe he did. I don't know. But just because something looks expensive or looks like it can't keep going doesn't mean it won't. It doesn't mean most of the time it will. And it does, because that's just how momentum works. People tend to pile into this stuff and then it gets crowded. And then there's no more money to pile into this. And then all the late people, like John, who was honestly not super late, but late enough, eventually lose money. So the trend is your friend. And John seemed to realize that. He also opened the trade at all-time highs. Again, I see a lot of people sort of worried about entry, worried about, oh man, this can't keep going. I'll wait for a better entry. I'll wait for a pullback. I'll wait for a deeper correction, something like that. Most people are absolutely terrified to buy something at all-time highs, and they're terrified with the entry, when in reality, they should be thinking about minimizing the loss. If you think about minimizing the loss at any place, you're better off, regardless of your entry. And if you look at something like the S&P or something like Bitcoin, buying at the all-time highs, buying the breakout, is usually pretty profitable because momentum is very, very strong with this stuff. Tech, crypto, meme coins, you name it. Generally, you see a lot of carry on follow-through momentum. He kept the size small on the trade. He's not betting the house. I think he said something like $500 position. He knew that he didn't know enough about anything to be careful here. He knew that the risk of blowing up to some degree is real, loss aversion to some degree. And the last thing you want to be doing, especially in crypto land and DeFi, which it's very easy to do, is betting your entire stack on every trade. I talk about this all the time. Protect yourself from yourself. Hardware wallet, software wallet, exchange wallet, CeFi, DeFi, whatever. Separate all that stuff. Do different types of trading for each account, sub-account. That way you can never blow up on a single trade, ever. It just can't happen. You can use multiple strategies and partition that amongst your accounts. He was also trading index and not an individual name. Most people, GME is a great example, AMC is a great example. They love focusing on, oh man, I'm going to trade GME calls because that's where the world's at right now, right? That's just what people see on social media. But to some degree, maybe it was a false sense of security, trading an index protects you from issues with the single name. So you can always create a custom basket for yourself. With crypto, we don't really have baskets yet that are broadly available. There's some stuff in TradFi on the legacy side that there are baskets of crypto, BitW, GDLC, just to name a few. But you can always make your own. You can always make your own basket of Bitcoin Sol ETH, or meme coins, or AI coins, or ETH L2, whatever, right? You can always do your own thing, which again, it takes this logical understanding of maybe I don't want to be fully allocated into one thing, one idea. Maybe you do. Maybe you don't want diversification. I certainly did not want diversification in 2013, and that worked out. Diversifying away from NVIDIA over the past year doesn't exactly help you beat NVIDIA, right? So there are times when diversification makes sense and when it doesn't, but you have to know the difference. And you can always take agency and say, you know what, I don't want 100% of my portfolio in WIF. Maybe I should buy some other stuff. So the cons, it was using leverage. Obviously, I don't know why he picked TQQQ. I think maybe because we were talking about it, had been talking about it for actually quite some time, just as a product and how that leverage happens in those products, what that means. So it wasn't like a snap decision, I don't think, for him. But many people, again, they trading with a small account, they want to turn a $1 into $10. They use 10x leverage or more, and then they just get demolished. So this is actually a better outcome than most people, this example trade. The other thing about QQQ is it's mostly Mag 7 tech, super concentrated, which has worked out recently. But again, the trade was a little late on the timing. Based on technicals, it was okay, but based on the timing of the general journey of AI, it's probably a little late as we're seeing some of that roll over. Like I said, it's up 300% since January. At least TQQQ is. You had NVIDIA splitting, and a few other things splitting. And this may reverse here. This may recover. I don't think he's provided an exit plan here, but that was part of the issue. There was no plan going into this, right? It was sort of just, I think what he said, let me see how this, gonna see what the ride is like. This is a classic retail mentality. I just want to be at the table. I want to be in the room where it happened, sort of thing. So you can save yourself from the round trip or worse by having an entry, exit, and stop loss when you take the trade. Every trade I take has some degree of exit, but definitely entry is very specific based on TA. Stop loss, very specific based on TA. Then in the trade, once you're up in profit, you can always add a trailing stop loss of some kind. Usually for me, that's Williams fractals, but you can use a moving average, alligator, whatever you want to prevent you from round tripping the trade. For newer traders, I think a trailing stop loss is super helpful in maintaining discipline because, again, they often close, they're up 2% on a trade, they'll close the trade. Whereas if they're down 20%, they'll keep adding or they'll leave it open till they get liquidated because typically they're using leverage. He didn't necessarily have a target on this, but again, you can add take profit levels, you can add common sense round number 80, 90, 100 in this case, or percentage gain on P&L, 10, 15, 20%, 25%. Typically when I have a position that's up 100%, I cut half of it, let the rest ride for however long, because then you take your initial capital out and you can put it to work elsewhere if you think the idea has generally run its course. I mentioned resistance. Again, he could have looked at a chart, not that he's a chart person, but just drawing horizontal lines on this all-time high and saying, 80's maybe a good spot to think about letting go of some of it, at the very least, right? Overbought, oversold, a little bit more complex for a newer person, but you can always use something like RSI or distance from the Kijun on the cloud to help figure that out. Preset closes, I mentioned that. Scaling out, I mentioned that. And that also provides a layer of discipline because let's say you want to scale out 50% of the position at anything above 10% profit. That prevents you from, again, closing too early. And really what you want is to never have anything outside of your plan. You want to say, this is my stop loss. This is as low as it can go. That's where it's going to hit. Or it's going to hit my preset closes. Or I'm going to hold it for X amount of time. But never just like this open, just let it be. Whatever happens, happens. That usually doesn't work out for most people, most of the time. I also asked ChatGPT, should I start trading with small account? What strategies should I use? I'll get to that in a second. Before I do, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. Inside of Kraken, if you ever want more information about some basics of indicators, you can click on the Learn About Indicators button, and you can dig deeper here on some very, very basic, bare bones information. BTC back in the range, perhaps a scalper's paradise, certainly not a momentum or swing trader's paradise. Breakout levels being above 72, another type of trading strategy. Most everything else doing a bunch of nothing today. I haven't really seen any large gainers. I guess there's a Ripple, but still chopping around within a broader range. For the most part, everything is going to be waiting on BTC. And this is kind of the issue with creating a basket within crypto because everything is so correlated, especially in a bearish period. Everything correlates to one. So if you've got a basket of BTC, ETH, Sol, AVAX, Ripple, for some reason, a bunch of meme coins, a bunch of AI coins, you just go down this list, you pick your 10 favorites. In a bear market, in a bear period, BTC will be down 2%. Everything else will be down 5 to 10%. So the diversification doesn't really help you in a bear period. That's certainly why you need to know a little bit about momentum and beta, because in a bullish period, some of the alts will outperform over time. Some of them won't. But that's, again, sort of this false sense of security that most people are like, you know what? I don't know about this BTC thing. I'm going to spread it out a little bit amongst a few of these coins, when in reality, they all generally trade in the same direction all of the time. There's very few instances where certain coins overperform over an extended period of time relative to any others. So you definitely have to be careful with that. So as far as asking ChatGPT, what are the best day trading strategies for a small account? Again, this is the question I get almost every other day, if not every other day, and certainly every week. What should I do? What should I do? So first thing to note, profitable traders exist. It's a bit of a survivorship bias. You only hear about the ones that survive. You don't hear about, most of the time, stories where people lost all their money or they're trading with way too much leverage. You never hear about the non-success stories most of the time. 99% of people lose money. So instead of trading, what can you do? You can focus on lump sum investing, DCA, paycheck warrior, every 2 weeks, every month, every quarter, whatever, to just say, you know what? I'm probably going to lose money, but I want to pay attention to the market. I want to be in the market. I'm going to do something else that's different. That's totally fine and certainly recommended for most people. Developing a system for yourself takes time. My system works for me. Certain other people's systems works for them, depending on their style, their personality, their mental capacity, their attention to the markets. It's going to be different for different people. Something else most people don't understand is you should expect to lose money. You should expect to lose a lot of money over time if you are learning, paying your trading tuition. And especially these days, people do not learn how to lose well. They're given their participation trophies and they really don't take losses well. So mentally, that can be extremely taxing on people. I talk about leverage and not using leverage a lot, but it will destroy most people. Most people, again, have no clue what they're doing. They'll use 10x plus, 20x plus leverage because you have access to that in the DeFi ecosystem. So I wouldn't recommend using leverage when learning. If you're using leverage when learning like John on TQQQ or on WIF or whatever, I would keep the sizing small for sure. I would have strict entry exit stop loss plans ready to go for every trade, not just something I'm YOLO gambling like a scratch off lottery ticket. Or the alternative, I sort of learned on 10x because in some sense that helps hone your system. As long as you have a system, you have to have the system first, right? But if you have the system, you can say, you know what, this is 10x. I know this is volatile. I'm going to lose money. But if I'm trying to learn a system or pick a system or a style, let's up the stakes a little bit. Let's get to this conclusion quicker on what works and what doesn't work. I would focus on the analysis and less on making the trades. Again, another thing people love to do is they think, oh man, I'm going to take a bunch of trades. I'm a trader. That's what traders do. I take a trade maybe once a week, definitely once a month, but certainly not multiple trades a day. That's just not my style. And there's definitely differences between gambling and trading, and I've gone through that ad nauseum at this point. Entry, exit, stop loss, sizing, etc. So according to ChatGPT, this is what is recommended for a small account. Scalping is one strategy. You take a lot of trades. Again, not something I like to do. Something that most people start with, but in my experience, almost nobody can do this successfully and well over time. And the problem with low time frame trading is you are competing with bots directly, and that can be very frustrating and infuriating. You can have a lot of fake outs, a lot of noise that just destroys any of this. So that takes time. I think the better thing to do is avoid scalping early in your trading journey and maybe revisit that every 6 months, every year, just to see if having the knowledge that you've gained helps you over time with that sort of strategy. It's just not for me. I just prefer higher time frame strategies. Momentum trading is something that I think a lot of newer traders flock to, which is a good thing. Significant short-term gains, similar to breakout trading, looking for the shiny objects, the NVIDIAs, the GMEs, the Solanas, the meme coins. But as I say here, again, you need to have a plan. You can't just go in there and say, oh man, TQQQ, right? Like, here's the momentum. Because with the volatility on the upside comes volatility on the downside. So you certainly have to have some sort of idea of what you're doing. And the last thing you want to do is identify the momentum and then take the opposite trade and say, you know what? I think this is the NVIDIA top. You know how many times I heard that over the past year and a half? This is the top for Bitcoin. This is the top for NVIDIA. It doesn't really work out too well for most people. Breakout trading, this would be chart patterns. This would be obvious support resist levels. This is something I love doing. This is great. That's for me. It allows you to know exactly what to do and where to do it. And instead of saying, I need to take all these trades, it's waiting for the price movement to give you the entry, to say, okay, this is what I do on the cup and handle breakout or the inverted head and shoulders breakout. So it's a waiting game. Love breakout trading. Yes, false breakouts can lead to losses, but again, that's part of the game. Losses are part of the game. You'll get false breakouts, fake breakouts, breakouts that don't reach your target. I mean, this example on the chart pattern here worked out beautifully. That is not always the case. Certainly not always the case. But a majority of the time, we do see some sort of price action into the fib extension levels, which is why I use those all the time. They're just so good at giving you some sense of where price may go and where to put closes on your orders. Reversal trading is deceptively very good for new traders because you always want to buy when there's blood in the streets. That's usually easier to do than shorting TQQQ, for example, because markets take the stairs up and the elevators down, and it will ride this wall of worry over time, as it did here. And it's very hard generally to pick a short target. But what you could have done is taken the opposite of this long trade, measured this cup and handle, and started to scale into a short position, whatever the inverse, I don't know if there's a 3x inverse QQQ, but there might be. But you could have started to scale into a short position between 81 and 91, staggering your orders every dollar or something like that, expecting some sort of reversal, identifying the inverted Adam and Eve, identifying further down here, maybe this is a head and shoulders. You can also just say on the downside, Bitcoin, for example, any negative 10% day is usually a great day. On the long side, if we look at historically, over time, we tend to see strong reversals on the worst days of the year. If we look at the worst days of each year from 2014, typically the average of a worst day is around 17%. So certainly anything around 10, 15, 20% on a day is a great buying opportunity. Just in the past couple of years, the average was around 10, 11%. But if we look at the forward performance, 3 months out, buying on the worst day of the year, currently the worst day of the year was January 12th. Forward performance has been excellent in the long term. So this idea of looking for when the RSI is below 30 on the daily for something like ETH or Sol or a meme coin or an AI coin or an alternative layer 1 or an L2, that can have very powerful entries, especially somebody for trading a small account, because you can just sit in cash, at least now, and get a yield. And you can just wait. This sub account, this partitioned part of my portfolio is literally only for the reversal day. I am waiting for the negative 10% day. I'm waiting for daily RSI below 30. So as a percentage of the total portfolio, you can employ multiple different strategies, obviously, but this is also a huge, huge winner, especially when we're talking about crypto to the downside, because we tend to see extreme downside moves in crypto that bounce back over time. News trading is not something I like, because really what you have to do is you have to predict where you think the news will take us, and then you have to be on the right side of the market based on the market's interpretation. You may have some interpretation based on the news, and the market will have some other interpretation. A successful example of this would be the GBTC discount trade. That trade was a slam dunk, where many people didn't think the discount would close, didn't think the ETF would get approved, and lots of people just avoided that entirely. But we've got plenty of other news examples like earnings every quarter. We've got FOMC nearly every month. A lot of people try to trade around that stuff. I just think that's a quick way to get to the poorhouse for most people. Swing trading is also something I do with the cloud, with high time frames, focused on not what it says here, day trading in the proper sense, but looking at something over multiple weeks, multiple months, versus being focused on getting in and out of a position in a specific day. Again, the cloud is really good at that. The systems I use, the TA I use, is focused on what I like for my personality. It isn't necessarily for everybody. That's why you need to find what works for you. And then lastly here on risk management, again, sizing, stop losses, be careful of leverage, and This is a huge one that most people don't ever think about. It never crosses their mind. Transaction costs, especially in crypto, and tax considerations can just eat you alive completely if you're ignoring that, which is again why I think it's better to focus on high time frames, swing trading. Think about where are we in the general cycle, where are we on general seasonality, versus being focused on making as many trades as you can, as much as you can. So, I give John's trade, I give it a C+, but in reality, John probably had no idea how good their entry was. And like many people tend to get lucky because they're on the right side of momentum. So he did a few things right, did a few things wrong, a few obvious things wrong that hopefully everybody listening to this video can learn from, employ in your trading, and get you on the side of becoming a profitable trader. That's all I have for this one today. Like, dislike, comment, share, subscribe. And if you've got your own case study you'd like to share with me, some questions, let me know in the comments below.